Good morning. Welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, October 23rd, 2008. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. It's 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, phone in toll-free from the U.S. at 1-866-67-CATEX. Overseas, our instant mail address on AOL is CATEX-TV. On this day in history, in 1983 in Beirut, Lebanon, a suicide truck bomber ran into the barracks of the U.S. Marine base, killing 241 American servicemen. At the same time, about half a mile away, another truck bomber struck a fortress of French paratroopers, killing 68 of them. Today's birthday, Edison Arantes is 68 years old today. Do you know who Edison Arantes is? It's Pelé, the Brazilian soccer god. We have one breaking story. Insurance Insider is reporting that Lloyd's insurer Amlin has now revealed that its star head of underwriting, Tony Holt, will step down from executive responsibilities at the end of this year, taking a non-executive board position. The news ends prolonged speculation over its group underwriting director, who had been working part-time since the end of June after taking a temporary leave of absence for medical treatment. Holtz's retirement, according to the Insider, from active duty will be seen as a blow for the insurer, with its underwriting supremo widely credited as playing an instrumental role in Amlin's successful track record, particularly in its catastrophe risk account. Well, our best wishes for a recovery to Mr. Holt, and we're sorry to see him go and hope he's back soon. The stock market, believe it or not, is up now about 161 points. There's a lot going on. As I speak, former Federal Reserve Chairman Alan Greenspan is testifying in front of Congress, and a couple of buildings away, Neil Kashkari is testifying in front of Congress. Kashkari is the Treasury official who's been designated by Treasury Secretary Paulson to oversee the $700 billion bailout. So with all that going on, let's add one more piece of wood onto the fire. Some numbers came out today on U.S. jobless claims. New applications for state unemployment benefits increased by 15,000 in the week ending October 18th, up to a seasonally adjusted 478,000. This apparently is boosted by 12,000 new claims stemming from Hurricane Ike. This is according to the U.S. Labor Department this morning. However, the 4-week average of seasonally adjusted initial claims, which smooths out one-time events such as holidays or weather, fell by 4,500. The number of people collecting regular state unemployment benefits also fell by 6,000 to a seasonally adjusted 3.72 million for the week ending October 11th. It's unknown whether that number fell because people simply ran out of benefits or whether or not they actually obtained jobs. Some more reinsurance news. American International Group agreed this morning to freeze some $19 million in payments to its former chief executive, Martin Sullivan, while New York Attorney General Andrew Cuomo reviews executive compensation. AIG has also agreed not to distribute any funds from its $600 million deferred comp pool coming from its AIG Financial Products subsidiary, which Cuomo has said was largely responsible for the company's near collapse. AIG, of course, has received billions of dollars of credit lines from the U.S. government. In a letter that Cuomo sent on Wednesday to CEO Edward Liddy, to be clear, quote, "It's my position that until the taxpayers are repaid with interest the more than $120 billion that has been used in the rescue financing of AIG, that no funds should be paid out of these pools to any executives." He went on to say, as AIG recovers taxpayer monies, these pools should not be used to reward executives ahead of taxpayers. Cuomo and the insurance giant agreed last week to work together to recover any expenditures deemed to be improper. Yesterday, a spokesman for AIG confirmed that the company had received Cuomo's letter. He went on to say, "It's consistent with our discussions with the Attorney General and with the actions we've taken." During a conference call with reporters this morning, Cuomo said Sullivan was still owed about $19 million plus other benefits under his employment contract. Sullivan was forced out by the board of directors in June, Cuomo then said that Joseph Cassano, the former head of AIG Financial Products, who was based in London, has a share of about $69 million in the deferred compensation pool. And 5 other top executives in the London unit also have a combined share of funds totaling about $93 million. These payments too have been frozen. Cassano received $1 million a month as a consultant from AIG after he left the company's payroll. That deal ended on the 6th of October. Also, Cuomo described the incentive packages as perverse. Quote, the incentives caused the executives to try to cash out quickly and big rather than develop long-term oriented business strategies. Once a company accepts tax dollars, says Cuomo, there are different rules. Oh yes, that's for sure. Transatlantic Re, of course, which is up for sale, has become the latest reinsurer to post a net loss for the third quarter, as the combination of financial market turmoil and cat losses weighed heavily on the sector. Transatlantic Re is owned 59% by AIG. It booked a $107 million net loss for the third quarter that reversed a $142 million net profit for last year's third quarter. The New York-based reinsurer said that the capital losses, which include some other than temporary write-downs on fixed maturity and equity securities, quote, were due to a severe decline in market values resulting from the downturn in the U.S. economy, ongoing turmoil in the financial markets, and credit events related to certain industry financial companies. Allstate's making some news. A double storm of catastrophe and investment losses slammed that insurance giant, pushing it to a third quarter loss, although the company's CEO said that some loss mitigation efforts might have reduced those losses. In an interview yesterday, CEO Thomas Wilson said that Allstate's capital and liquidity positions are strong, although he said he would take a, quote, cautious and thoughtful stance toward acquiring any insurance businesses up for sale today. The nation's largest publicly traded personal lines insurer reported a net loss of $923 million. This compared with a net income of $978 million for the third quarter last year. Revenue dipped 19% to $7.3 billion from about $9 billion as insurance premiums and bank deposits fell. Allstate's investment portfolio also took a hit in the quarter, dropping from $114 billion at the end of the second quarter to $105 billion at the end of the third. Now, of course, the third ended on the 30th of September, which means all of the troubles that occurred in October have not yet hit. Wilson said Allstate has no investments in commercial paper, and he said that we have $5 billion we can get on one day's notice and $33 billion we can get in one quarter. Cat losses at the company increased to $1.8 billion from $343 million a quarter the year earlier. It's higher than what some analysts predicted. Wilson said he expected the first 9 months of 2008 to be Allstate's second highest for cat losses ever, except for the same period in 2005 when Hurricane Katrina hit. There's a little-known agency in the United States called the Pension Benefit Guaranty Corporation, more familiarly known by its acronym, the PBGC. It's a government agency that insures private sector pension plans. That agency lost $1.2 billion in the past 11 months, up until the end of August, including a $3.1 billion loss in stock investments. The PBGC incurred the loss even before the stock market's big tumble in October. This was released in the House Education and Labor Committee in a field hearing yesterday in San Francisco by its chairman, Congressman George Miller of California. The PBGC later confirmed the figures. However, the PBGC downplayed the decline, saying it was only a 1.2% drop from January 1st to the 31st of August, compared with a drop of 12.5% by the S&P 500. They claim that their prudent, diversified approach to handling investments resulted in a loss far smaller than those suffered by most other market participants. The agency protects the retirement savings of about 44 million Americans. It ended 2007 with a $14 billion deficit. The PBG's stock market declines were offset by gains in other investment classes such as fixed income, and the agency has about $68 billion worth of assets now in 2 funds, both of which are used to pay benefits to workers whose pension plans have failed.